Hello, everyone, and welcome to Uptrend Finance. I'm your host, Stian Flange. Nuclear energy is undergoing a renaissance with new reactors seemingly being commissioned every month. With that comes renewed interest in the investment in the fuel that powers those reactors, uranium. With us today, we have two guests who are setting up a new fiscal uranium investment vehicle. Patrick Michael, chairman of Zuri-Invest, and Bram Vanderelst, head of uranium at Curzon Uranium Ltd. Thank you for joining the show, guys.
Yeah,
You're welcome.
thanks, Stian, for having us.
Thank you
And
indeed.
hello, everybody.
Patrick, let's start off with you. Can you tell the audience briefly about your background, what you do at Zuri-Invest, and the basics of this new fiscal uranium investment vehicle?
Yes, sure. So Zuri-Invest is a Swiss-regulated asset manager. We're based in Zurich. I'm a second generation running the firm. It's classical asset management with a specialization on the mining sector. And we just saw with the whole energy transition that we are kind of living through being in Europe, that uranium is a kind of followed topic, but a very important one going forward on the whole emission reduction scheme, and also for providing baseload energy. And we got together with Curzon Uranium with the idea that there should be a more European-centered vehicle allowing to invest into physical uranium.
One of the main questions I've seen and talked about on Twitter when the news broke about this new vehicle is what you call an actively managed certificate. Can you explain how that works compared to, for example, the Sprott Fiscal Uranium Trust, which is an exchange listed product?
Yes. So in Europe, there is a kind of quite a big scene in structured products, and the active managed certificate also belongs into the structured product family, as in a tracker certificate that follows, in our case, the commodity physical uranium. And what we wanted to achieve and have achieved since a few days is to give straightforward access to investors, meaning that the active managed certificate directly has storage facility contracts with Cameco Canada. So when money enters into the structure through Curzon Uranium as professional uranium traders, the trade is being facilitated, be it a buy or a sell order going forward, and stored in the investor's name at Cameco. And we feel that is the most straightforward access, as we truly believe in quality and easy structures. So for each unit, you know that you have your uranium in a safe jurisdiction in a highly regulated storage facility. Now, active managed certificates, they are like one regulatory level below a publicly listed fund, meaning that it's for qualified investors only, and in our case, for non-US persons. It does have a Swiss ISIN number, so basically it should be able to buy the Swiss ISIN number through your bank, as you would buy a share of a Nestlé or Novartis.
That brings us to your target customers. Do you want to speak to what kind of investors you expect will be interested in products? Are you targeting retail or family offices or institutional investors?
Given the specialized market for buying uranium, we had to kind of find the balance of a minimum investment of $100,000, as Curzon will then have to match the trade in the background with the usual lot sizes in uranium. And that shows it's a narrow market, the physical market, it's a specialized market. we want to provide kind of a fair way for investors to be able to participate. So we had to set that minimum level at 100,000. We feel this vehicle, it's more for the institutional audience, high net worth persons that do want to have in their energy mix and exposure also some physical uranium.
You are planning to do an initial raise, I understand, you're targeting up to $100 million US dollars. Is that correct?
Yes, that's correct. The function is that we have a 4-week subscription period at $1,000 per unit. And after that, the product is daily priced through a third-party trade tech providing us pricing. And it will be also daily tradable in the sense that one can buy or sell units with a lag time to allow for the positioning in the physical space, which I think Bram can tell us afterwards more about the special function of this market.
And if I can add to that, I think what's important to understand is that it can be bought on a day-to-day basis, and it always trades at net asset value because it's only a primary market product, so it's not listed on a secondary market. So investors always buy at the net asset value minus a small 50 base point spread, and that allows for the investors to have pure exposure to the underlying uranium price without any secondary market effects, which is important as an investor, and that's why our target audience is mostly qualified, larger institutional family offices, hedge funds who really want to use this as part of their portfolio in their renewable energy portfolio or in their decarbonization portfolio. That's really where this specific investment should sit in the larger portfolio.
So that means that you are clearly differentiated if you compare it to the spot vehicle, which is can trade. We have seen it trade down to 15% discount. So with this vehicle, you get a pure
correct
pure investment in the spot price of uranium.
And what we've seen with our peers inside our commodity, inside uranium, but also outside our commodity with different commodities, if it's a vehicle is traded on a secondary exchange and there's no redemption mechanism, that allows for the vehicle to trade at a discount, which is most of the time the case. And that is typically not driven by the commodities underlying prices, but it's driven by global equity markets and how the equity market sentiment is on the day. And so we wanted to take that out of the equation for the vehicle that Patrick has set up, and therefore we went for the AMC structure that is that's open-ended, that allows for the investors to have pure exposure to the uranium market as such. And that's also why we've done it in such a way, because we believe in the uranium market, and we don't want to really take a view where the world is heading, especially not after the recent events in the banking sector and everything else. So I think that's a key point there.
We like to kind of describe it as an ETF lookalike product that we have set up, providing quality partners. Zuri-Invest, 42 years in business. We have Curzon Uranium being one of very few traders in the uranium space. Cameco as the storage partner, Trade Tech as the price provider. So we feel we can offer a high level of quality. It's important to us. We always put also our own money and our clients' money in the products we support and launch. So we do hope that if it's good enough for our side, it will be also good enough for fellow co-investors.
So after the initial raise, how often will you be going to market to buy more product? Will each purchase of a unit trigger a purchase in the market, or do you have to reach a certain level before you go out and buy those physical products?
So it's an open-ended product, so money can flow into it on a day-to-day basis, as we explained earlier, and flow out of it, of course. And the commitment that we're making through the back end of this product, so through the physical side, is that as soon as there's enough capital in the product that allows us to go out and buy a lot size in the uranium space, and a typical lot size in the uranium space is £100,000, then we will commit that capital into the spot market and buy that. And so essentially there will be a very, very small cash drag, which is essentially the difference between the money in the EMC and getting to a lot size, which currently is worth about $5 million.
When it comes to redemption, can you speak a little bit about how that works and if there are any restrictions to redemptions?
Yes, absolutely. So redemption works exactly the same way as on the way in, on the way out. So people can always put in a sell order, and that order will be considered to be a redemption. And either we will pay that we'll pay the investors back their money from either cash reserves in the fund or in the MC, I should say. If there's not enough cash reserves, then obviously that means that there's a uranium sale trigger. So we will then sell uranium on the open market that we can generate the funds to pay back the investors. Or if there is a redemption and that coincides with other money flowing in, then obviously they will be offset and they will be matched. And so essentially the only restriction on the redemption is that there's a bit of a longer lead period until the cash is returned to investors, especially if it's a larger redemption, because we need to allow for the uranium to be sold and to be settled to then be able to pay back the investors. And so we think that will be a 30-day to 45-day maximum period that investors might be waiting until they're fully redeemed. But that redemption is definitely a feature that's important to the AMC.
Bram, as a trader of the physical products, can you speak a little bit about where you plan to be buying the product? Are you only going to target the spot market?
We will buy only from the spot market, but we're agnostic who we buy from. So it could be either a producer, it could be another trader, it could be utility for all we care. So we will basically be buying from whoever is willing to sell material in the spot market, and for us, we'll let the market be the market. Another goal for this vehicle is to provide more efficiency to our market and price discovery. And I think this can only be obtained if we go out in the market as an active market participant and buy when we need to and sell when we need to, and just show bids and offers at times that we want to do business. And we want to keep it very simple and straightforward. And that's why we also want to restrict ourselves to buy in the spot market. The market will readjust if, for whatever reason, there's not enough material available in the spot market. I'm sure the market dynamics will readjust in such a way that material will be made available depending on what the price is. So we are not trying to be a long-term player or anything. It's very straightforward and simple. We buy and sell in the spot markets.
Will you have a limit until how far out in the curve you're willing to go in case there is not product available for immediate delivery?
We won't necessarily put a fixed date on it, but what we determine as a spot market is a 3 months window, and that's the common denominator for spot market in our business. We will try to limit that to, let's say, 30 days or 45 days as well, and that's really the goal. And as a market participant, I've seen that it doesn't necessarily need to be any longer than that. Even if there's no real material available for immediate delivery, the market can restructure itself that material will be made available for immediate delivery. And what I mean with that is, if we bid a certain price and the price is sufficient to incentivize somebody to take a delivery further out and release some inventory in the spot market, then that is good enough for us. But we want to make sure that our investors are fully invested in uranium as soon as possible as the money flows in. And to do so, we want to be able to make sure that the uranium is bought on a short-term basis and not on a long-term basis.
Maybe, Bram, if you don't mind talking a little bit about the spot market activity and how you, maybe some kind of prediction. Do you mind that?
I will refrain from putting an actual price prediction out there because people will hold me against it. But I think taking a step back, I think the macros the macro story for uranium and nuclear in general has never been better. The energy transition has clearly shown that we need some reliable non-carbon or zero-carbon baseload power, and that can, at this day and age, can only be provided by nuclear. So nuclear is being really embraced around the world, and that's literally across the world from the east to the west. So that's obviously the background under which or against which we're running the uranium EMC. Uranium as a commodity itself, which is obviously back in the nuclear power, is looking pretty good, and it's looking pretty bullish because we're looking at a market that's sustainably undersupplied, and that undersupply can only be solved by new mines coming online in the future. And we all know how difficult it is to put a new mine into production. We've had a sustainable undersupplied market for quite a few years now, for at least three, 4 years. As we work through inventories, and what we've seen in our market is that the market is gotten pretty illiquid at times, and we don't really see a lot of volume either on the purchase or on the sales side available. And so our market is set up for a breakthrough, and that breakthrough is more likely to the upside than to the downside. And I'm never going to say that is only upside. There's always downside in markets, but that's the sort of background that we see in the physical market at the moment. And then it's a function of investor demand, and not just through us, but through other vehicles as well, that can play an outsized role on where the market is heading. We obviously see utilities coming to the market as well, because utilities aren't passive actors, and they're very smart actors in our space as well, and they understand the space probably better than most people. So they do understand that there's a shortage in the future, and that they need to restock at some point. So we do see that as well. So I think our industry is really set for a leg higher, with obviously certain risk factors that are linked to that.
Thank you, gentlemen. It was a very interesting conversation, and good luck with the launch of your product. And I hope we can talk again soon.
Thank you for having us.
Thanks a lot. Thanks for the opportunity, Stian, and we appreciate your commitment to the sector.